Hi and welcome to this week's Fried AI with me, Billy McLaughlin, where I cut through the first and get to the facts on the big bad world of AI and what it means for us as accountants, bookkeepers and finance professionals. Big show today because Xero have partnered with Anthropic, the people behind Claude. So if you're a Xero user, you really need to hear this one. We've also got Microsoft basically admitting it went a little bit too far with Copilot, Google trying to nick your chatbot history, which is pretty cheeky, a solid piece from Richard Sargent over on Accounting Web about where AI still falls flat, and some interesting stats on trust in the US on AI. So let's get into it. I obviously have to start with the hottest news right now, which is Xero and Anthropic's partnership. So this dropped last week and it's a really big deal. They've signed a multi-year partnership. So what this means in practice is that Claude's AI is going directly into Xero. And the important bit is also that Xero's financial data is going to be going into Claude. So it's a two-way integration, not just a bolt-on. And to give you a bit of an example and a bit of background, if you have seen the launch of Jax, Just Ask Xero, over recent years, this is now going to be powered by Claude's reasoning engine. So it means that Jax goes from just spitting out data to properly answering your questions, and eventually it's actually going to do the tasks for you. We hear the agent word all the time, so I'm going to try to avoid that buzzword. But we're talking about things like analysing revenue or profit, tracking cash flow, flagging unpaid items, but it will then suggest what to do about them. So it's not just showing you the data anymore, it's going to tell you what to do with it, and that is where I think the key value is. Now that's kind of within Xero, but outside of Xero, so if you get into the Claude model, you're going to be able to connect the data straight from Xero and you can pull in the live numbers. So the revenue numbers I was just talking about, or the profit or the outstanding invoices. And then you can use Claude to connect that to external market data and then start coming up with different scenarios and modelling different situations that your client might come across. This could be anything like, what does it look like if I hire somebody in month 2 or take on a new property? But it's all going to be in one place so you don't have to switch models. And the plan is to let it run with it and have a full agentic AI that can kind of do it all for you without you having to do much at all, probably one click or two. If this works, I'd say this is pretty huge. Data privacy, I know, is on all of your minds as I'm saying this, so don't worry too much. The financial data shared between the platforms is session only, which means that the data will never be used to train Claude's model, which is exactly what we all want to hear. And to be honest, it's great to see that this is kind of baked into that partnership. It's not an afterthought. They've thought about how important the security is and they are going to look after your data. A couple of other bits though, and looking kind of under the hood a little bit, and what people don't really remember or understand is that Xero already have a partnership with OpenAI. So this was the deal that was announced at Brisbane XeroCon back in October last year. And OpenAI handles the web research side, so tax laws, market trends, that kind of thing. Anthropic now handles the financial reasoning side of things, so the workflow automation. And then Jax is going to sit in the middle and basically orchestrate both of depending on which one is better at which task. So basically Xero is running two providers side by side, using each one for what it's best at, which is the exact same approach that I'm seeing amongst users of LLMs at the moment. You're avoiding that lock-in, you are avoiding the dependence, and you're playing to each of the strengths, which is great. So really smart strategy from people using the LLMs, but also really smart strategy from Xero, who've obviously thought about the fact that they don't want to be too reliant on one product. Okay, so if you're a Xero user, you're probably thinking, what does this actually mean for me? Well, I think for too long now, we've seen products kind of bolting on features and calling them AI, and usually it's just a better automation and they've stuck a chatbot to it. This feels genuinely different in my opinion, because your client's data doesn't have to stay locked inside Xero and you do everything from there. If a client rings you up and asks, can I afford to hire someone in month 7, you can pull their Xero data into Claude, combine it with that market information and give them a really proper, well-reasoned answer. That's the advisory work though, that a lot of people are saying AI can't replace. So it's making advisory much more accessible, not complicated, and I think that's the key distinction. So I'm pretty sure that that advisory work that AI couldn't do is on its way. It's also worth remembering that 80% of UK firms have less than 5 members of staff. So Anthropic have actually come forward and said that usually to get this level of detail, you would need a dedicated CFO to get this type of financial intelligence. But now it's available through tools that actually you're already using, so there's not too much of a difference for you. Before I finish the segment, I just want to bring it down to earth a little bit. This is rolling out in the coming months. We don't actually have access to it yet. And I don't know how much this is going to cost. So is there going to be a cost associated with Claude and Xero? And the big test is obviously going to be accuracy, because if Jax flags something wrong or gives you something incorrect, the consequences are serious. It's your name on the work, not the AI's. So as always, keeping that kind of professional judgment is very, very important. But if it all works, as I say it will, I think this is going to be a huge move in the accounting space. Okay, next up, and this is a good one from the legend that is Richard Sargent, who wrote an article for Accounting Web about where accountants draw the line when it comes to using AI. And this is part of their State of the Nation research that was done with Sage. I mentioned it a few weeks back. They interviewed 600 accountants and bookkeepers. And the headline here that Richard is talking about is this near perfect split, that 55% said that all services are potentially suitable for AI as long as the oversight is there. But 45% drew a bit of a line and said that basically, no, there are AI risks and it dilutes the value that we are providing. And it's important to say here, like, this is a judgment-free space. These 45%, they're not technophobes. They're just being realistic, saying there are areas that AI should not touch. Now, if you look at the areas where those lines were drawn, there was 3 main themes. So the first one being judgment. So things like complex audit work, subjective tax matters, the feeling that AI can handle the what and the when, but it's not really equipped with the why. Honestly, I would probably argue this one and say give it 12 months and I think you'll be surprised. So I'm not sure reason 1 is that valid. The second was empathy, so face-to-face conversations, chasing late payments, having those conversations of why clients maybe can't pay, the stuff where the human relationship is kind of the whole point. So automating that might be efficient, but it's not necessarily the best thing to do. I do think there's going to be a place for faceless firms, but I do agree that it cannot be replicated in the sense of that's what clients value. And the third one being ethics, so kind of that moral reasoning, the critical thinking in a profession that is so highly regulated and built on that professional trust. Outsourcing ethical decisions to a black box, it doesn't sit right with a lot of firms, and I totally appreciate that. I think Richard put this really, really well at the end. He said the firms that succeed will be the ones that can explain this distinction. So use AI to drive the efficiency, but protect the judgment, the empathy, the ethics that only a qualified and experienced human being can bring. So that hybrid model and the balance that the future firms are going to get and that they're going to need, that is where we're going to see the firms succeed the most. And a quick one on trust, since we are on that thread, from the US, where a university that I cannot pronounce, it's called like Quinnipiac University. That'll do. They interviewed 1,400 Americans on AI, and to be honest, the contradiction is quite brilliant. So AI adoption itself is up. So only 27% of people have never used it. Last year it was 33%. So more people are giving it a go. Great. But trust is actually going the other way. So 76% say that they rarely or only sometimes trust AI, which means people are using it more but trusting it less. And I think it's kind of the same pattern we're seeing in accounting. So my question is, how do we get these two go up together? How do we get people to adopt it more but trust it more as well? And surely the only answer is training. So I'd be interested to hear what you think the answer is on that one. Also, just to add to this, a few other stats that came out of this. 15% of Americans said they would be happy working for an AI boss, which seems to get all the headlines. The headline I think we should have concentrated on, though, is that entry-level job postings in the US have dropped by 35% since 2023. So it's worth thinking about if you're planning recruitment or if you know people looking for entry-level jobs, because as this happens, are we going to come across a time where nobody can get a job? Is this going to be like the housing ladder? So we're going to have a bunch of a generation that can't get on the housing ladder and they also can't find an entry-level job. So it kind of leaves quite a scary thought for the future. I don't really like to go down the negative path, but that's what the statistics say. Anyway, next up on some lighter news, Google Gemini have launched something called switching tools. So it now means that you can import your chat histories and memories from the likes of ChatGPT and Claude, export a zip file, upload it, and Gemini will pick up exactly where you left off on the other LLMs. It's clearly a play to kind of close the gap on ChatGPT, and also a total rip-off of the tool that I launched last week on LinkedIn. So Google, my lawyer will be in touch. But seriously, this is the exact problem that I built Migrate to solve. It was just a bit of fun, so if you want to use that, I'll pop the link below. But it just gives you a prompt and some instructions to switch from one LLM to another, and hopefully you find it useful. And finally, Microsoft have admitted it went a little bit too far with Copilot on Windows 11. So they're pulling AI out of Photos, Notepad, widgets, and the snipping tool. The plans for Copilot in things like settings and file explorer also quietly put to the side. And basically Microsoft is saying, we shoved AI everywhere, people got fed up because it wasn't really needed, so we're bringing it back out. And this is a really great message, I think, to end on, because AI in your accounting tools to do something useful, yes please, all day long. But AI just to say you're using it and it's kind of present, it's just not worth it. So definitely be a bit more intentional about why you're using it and if it's actually doing anything good. Right, that's a lot from me this week on Friday. Stay curious, but obviously stay skeptical. I don't know if I sound a bit like Ron Burgundy. Stay curious and stay skeptical. And enjoy your weekend. I will see you all next week on Friday.